If you're thinking about the financing of medical expenses, I've got great news for you because I want to share with you actually a few top loans to consider this year. Okay. So when it comes to financing medical expenses, you have Discover. I mean, Discover has been around for many years, even decades. And the cool thing about Discover is that if you want to finance, let's say, a surgery or an upcoming surgery, or let's say an intervention that has already taken place, Discover will offer you flexibility. Okay, and the cool thing about Discover is that you can be approved actually within 24 hours. Okay, so you're looking at an APR that goes from 8% to 25%, pretty decent, and you can actually get anywhere from $2,500 to 40 grand. Okay, so you can actually use Discover to actually cover a medical expense. Let's say a low to average medical expense. Okay, $2,500 to $40,000, and you have about 84 months. So you're looking at 7 years to repay the loan. Okay, so that's really good because if you've got a major operation, whatever, a major intervention, and you need time to actually repay the loan, Discover can really help you big time. And with Discover, the cool thing is that there are no origination fees. And also the loan funds may be sent by the next business day. So if you are if you are waiting for money to actually take care of an emergency medical intervention, Discover can really be helpful there. The second, the second lender that I want you to think about when you are considering financing a medical expense, I want you to think about Alliance. So Alliance is actually a credit union, which means you've got to be a member of the credit union before actually applying for a loan. But see, the cool thing is that Align has no geo restriction. So the eligibility criteria for membership are pretty flexible. Okay. So anybody in this country can actually qualify for membership either through their geography or just by donating $5 to a charity that Align is actually sponsoring. Okay. So, and you're in. And what I love about Align is that their loan amounts is actually higher than Discover because Alliant actually can lend you anywhere from $1,000 to $100,000. Not a lot of lenders in this space will give you 6 digits in terms of personal loans. You don't have a lot. You have SoFi, you have Lightstream, you have Alliance, okay, and then you have Wells Fargo. So you have those are the top four that I can think about, okay, that actually can give you a maximum loan amount for $100,000. If you're looking into financing medical expenses and you're thinking about the top lenders that can really help you out, think about PenFed. So PenFed is also another credit union, a wonderful credit union that I love a lot. And PenFed used to be affiliated with the military. So you had to be back in the days. You had to be you have to be affiliated with the military to actually qualify. But nowadays, anybody in this country can qualify for membership. You don't have to be affiliated with the military. You don't have to be to have a family member who's in the armed forces, whatever. No, anybody in the 50 states and the District of Columbia can actually qualify for a PenFed membership. Okay. And the cool thing about PenFed is that you get a maximum loan amount of $50,000. Okay, so if you're looking to finance a medical expense, $50,000 maximum to be repaid over 60 months. So that's 5 years. PenFed is a pretty good, is a pretty solid choice to think about. Okay, and one thing I love about PenFed also is that you have very competitive APRs. So PenFed is actually a credit union. So the maximum APR they can charge you is 18%. Okay. So right then and there, you have very competitive APRs. There are no origination, prepayment, or balance transfer fees. And that's really cool. Okay. At the end of the day, PenFed is a great option to consider. You also have Lightstream. So if you're trying to finance medical expenses, besides Discover, Alliance, PenFed, think about Lightstream. I think I just talked about Lightstream a few minutes ago when I said it's among the top four lenders that will give you a maximum of $100,000. Okay, so Livestream actually will give you a maximum of $100,000. However, Livestream wants you to have a good FICO score. So if you got to have a FICO score north of 650 or 670, so good or excellent FICO score to actually qualify for for a Livestream loan that you can use for financing medical expenses. Okay, so that's important, and you have to repay the loan over 7 years. Okay, and the loan amounts again goes from 5,000 all the way to $100,000. If you want to finance medical expenses and you're looking for a pretty flexible loan provider, I want you to think about Upgrade. So Upgrade actually is a fintech. Upgrade is not your traditional lender, your bank lender, or your credit union lender. It is a traditional lender because, by the way, Discover is a traditional lender. So is Alliance, so is PenFed, and so is Livestream. By the way, Livestream is an online lender that is affiliated. There's a subsidiary of Truist Bank. Truist Bank. So Truist Bank is a traditional bank, okay? But Upgrade is actually a fintech, and basically that means that they are in partnership with a traditional bank to actually provide banking services. And with Upgrade, what happens here is that you can get a maximum of $50,000, even if your FICO score is low. Okay, they'll give you so the minimum FICO score they look at is 600 to 620. Okay, and you have to repay the loan over 7 years too. They always love the 7 year thing. The only problem with Upgrade and also other fintech that I've seen, other fintechs that I've seen, is that they charge you an origination fee. So they charge an origination fee that can go all the way to 10%. That's a lot of cash. That's a lot of, and on top of that, they charge you a high APR, like 36%, which is the maximum legally allowed. Okay, but hey, listen, it is what it is. You also have Best Egg, another fintech that actually is trying to play a good role in this space. And Best Egg is also giving you a maximum loan amount of $50,000 to be repaid over 60 months. So that's 5 years once again. Okay. And you can use the loan for medical expenses, medical emergencies, whatever your insurance company doesn't cover. You are able to get a loan to cover it. Okay, you can have an agreement, and the cool thing is that Best Egg can send the money directly to the hospital, or the hospital or clinic where you had the intervention. You don't have to even worry about like doing all kinds of you don't have to be in between. No, they'll send the money, like similar to when you have a debt consolidation scenario. If you're looking into financing medical expenses, I want you to think also about Upstarts. By the way, Upstarts, Upgrade, Best Egg, those are fintechs. And by definition, fintechs, they actually charge origination fees that can go all the way to 10%. Okay. So just be aware. What do I mean by that? I mean that if a lender is charging you, let's say 10% origination fees, it means that if you are approved for a $10,000 loan, you are only getting 9,000 because 10% is going to the lender. Okay. So you're getting 9,000, but you are responsible to pay the full 10,000. So this could be a little disruptive for some people in terms of cash flow. So just be aware of that before you actually reach out to those fintechs. Okay. With Upstart, you get the same thing. Maximum loan amount $50,000, minimum FICO score 300, which is really good. So Upstart will work with you no matter what to finance your medical expenses. And with Upstart, you can get funded as soon as the next business day, which means if your hospital, your clinic, or whatever medical institution you're working with, if they're waiting for the cash real fast, basically Upstart can really help you. You also have Rocket Loans, another fintech that actually can give you a maximum of $45,000 to cover your medical expenses. Okay, and but the cool thing about Rocket Loan is that, as the name implies, they give you Rocket Loans. In other words, you can be approved the same day and you can be funded the same day. Okay, that's really good. I mean, and there are no prepayment penalties that apply. Okay, that's pretty good. But again, Rocket Loans is also a fintech, which means they are charging an origination fee. Now, luckily, quote unquote, luckily, with Rocket Loans, they don't go as high as 12% as you may have seen with Upstart. Rocket Loans is limiting their origination fee to 9%, which is still high anyway by my standards. Okay, but hell, it is what it is. And you also need to understand that if you have a low FICO score, you may not be approved because Rocket Loans is different from Upstart. Upstart will take everybody. They'll take everybody, bad credit, low credit, fair credit. Okay, but Rocket Loans, they want you to have at least average credit score. So if you want to finance medical expenses and you're looking for lenders who can really accompany you, I want you to think about Achieve this year. And Achieve actually is pretty good in terms of giving you an APR that goes from 9% to 30%. Okay. But their minimum FICO score is on the high end, so 600 to 640. Loan amounts actually $5,000 to $50,000. Okay. And you have to repay the loan over 5 years, so 60 months. Okay. But one thing you need to really understand here is that basically Achieve is also a fintech, meaning that they're charging you an origination fee, but quote unquote, luckily, their origination fees are not as high as Upstart's because Achieve is charging you anywhere from 2% to 7% in origination fees. Okay. And also, as I said earlier, their APRs are pretty decent too. You're looking at 9% to 30%. That's really cool. Finally, the last lender I want to share with you, if you are thinking about financing medical expenses, your medical expenses is actually SoFi. And I think I've said this before. SoFi is part of a very private circle of lenders that give you a maximum of $100,000. Okay. So like I said, besides SoFi, you have Wells Fargo, you have Lightstream, and then you have Alliant Credit Union. So SoFi is giving you anywhere from $5,000 to $100,000 to be repaid over 7 years, so 84 months. Okay, so that's kind of cool, and they don't charge late fees. Okay, and SoFi also is making things a little more flexible to borrowers because they accept co-borrowers. So this is something to really think about. If for any reason you do not qualify for the loan right away, you can always beef up your loan application by actually attaching a co-borrower to your application. Okay, but bottom line, remember, you can borrow anywhere from $5,000 to $100,000. So when it comes to financing medical expenses, it's important to understand that you have a lot of lenders who are willing to work with you. Some lenders want to pay directly the hospital or the clinic. Okay, some lenders are fine in giving you the money and have you actually pay the lenders later on. Okay, so let me give you a few generalities here. So when you think about medical loans, what are we talking about? We're talking about money that you can use for medical expenses, and so your loan funds can be applied toward just about any medical costs, including health insurance deductibles, dental procedures, and physical therapy and rehab services. Okay. And you can also use a medical loan to consolidate medical bills. And if you qualify for a loan with a low interest rate, you can simplify your monthly budget. Okay. And save on interest big time, especially because those medical loans are usually large. They come in large amounts, by the way. Okay. So if you want to qualify for a medical loan, pay attention to your income, to your credit score, to your credit report, and also the loan terms, because lenders actually they tailor their loan programs to a certain audience. Okay, so when it comes to the pros and cons of medical loans, medical loans can be used to consolidate medical debt. If you require necessary or urgent medical assistance and can't afford it, a medical loan will allow you to get the treatment you need. And most medical loans are unsecured and don't require a house or car as collateral. On the flip side, a personal loan tends to have higher interest rates than other forms of financing. You may be able to get something better, such as no interest or low interest financing from the healthcare provider, or financial aid if your expenses are from a nonprofit hospital. And some medical loans can take up to a week to finance, which may not be quick enough if you have, let's say, an emergency. One thing for sure, if you want to get a loan for medical bills, you first need to figure out how much you need to borrow, right? Don't just borrow randomly. Whatever you borrow has to fit into your budget. So figure out how much to borrow, check your credit, research lenders and loans. I've given you 10 lenders into this conversation. Those are the top 10 lenders in our research, but maybe you'll find more, okay? So you want to research lenders and loans. You want to select a lender and apply. And then you want to receive the funds, okay? That's pretty straightforward. One thing you also need to remember here is that if you want to compare lenders for medical financing, you have to look at their APR, so annual percentage rates, okay? You also will need to look at the loan speed. How long does it take for the loan to be funded? You do not want to start a process with a lender who's not gonna fund you within a certain period of time. Also think about the loan terms and also the fees. Like I told you before, those fintechs, they're charging you loan origination fees, and those fees can go all the way to 12%, which is really high. So make sure that you take that into account before you actually sign on the dotted line. So one thing you need to understand is that when it comes to financing medical expenses, you got to really ask yourself whether it's good in your situation for your budget to get a loan for your medical expenses. Okay, you always need to weigh the pros and cons of a medical loan before using one to pay for medical expenses. Okay, so one thing I will tell you based on research is that it may actually make sense to take out a medical loan when faced with necessary medical expenses where you cannot pay for it yourself and your insurance doesn't entirely cover the procedure, right? It's all about looking at your cash inflows and your cash outflows. The bottom line is you do not want a medical procedure to ruin you, to actually deplete your budget, okay? So, but one thing you need to understand is that you also need to consider whether you can qualify for good loan terms. You can get the funds quickly, and you can use the funds to pay for medical expenses. Some lenders may attach some restrictions to the loan proceeds, like in terms of use of loan proceeds. They may tell you can't use the loan for this and that, okay? So you got to always look at those conditions to see if a medical loan is actually appropriate for your situation. Now, a medical loan might not be your best option if you will have higher loan costs. If you can find cheaper options, okay, or you can't borrow the amount that you need in the first place. Let's say you need 20,000, but the lender can only give you $5,000. Is that a good strategy? I don't think so. So now there are alternatives to medical loans, by the way. You can also ask about a payment plan at the hospital or clinic where you actually are going to have that procedure. You can open a medical credit card, okay? You can use a credit card with a 0% intro APR. That's totally possible. You can use a personal line of credit, and you can also tap your home equity to actually get that extra cash, or you can consider a 401k loan. Those are totally possible. And you can also explore state assistance programs, okay? For instance, you can reach out to state or local social services agencies, community health care clinics, research institutes such as the National Cancer Institutes and the National Institutes of Health, okay, which actually seek participants for trials on many conditions and diseases. You can think about pharmaceutical assistant programs. You can think about dental schools and clinical trials for low-cost dental care. So you have a lot of possibilities. So as an epilogue into this conversation, I spoke to you about the top lenders to consider when you are financing, when you're thinking about financing medical expenses. So in terms of top loans, I spoke to you about Discover, Alliant Credit Union, PenFed Credit Union, Livestream, Upgrade, Best Ag, Upstarts, Rocket Loans, Achieve, SoFi. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.